really without a question, short of the traditional fake news in the fintech industry, is the only legitimate source of information that you should be paying attention to across payments and fintech. Brett King, as you all know, is an entrepreneur in our industry, but he's also a great storyteller. I think this is the 205th edition of Breaking Banks, and I know it's a legitimate and widely listened to source of information in our industry because I've never been asked to be a guest on it. So that's your best indication that he knows what he's doing. Many of you
given such a kind introduction.
Many of you know Brett as I mentioned, an entrepreneur in industry, founder of Movin', also a serial author as well, 4-time best-selling author. His next book coming out fairly shortly, within the next couple of months. Okay, so be looking for that. That will be his 5th best-selling book as an author. And he also gathers together the best minds in the industry to talk about pressing topics. Today's topics include real-time payments and what they mean for the payments industry, what they mean for mobile. His guests today, Travis Dulaney, is one of the founders and CEO of Push Payments. And Dan Gonzalez is the VP of Payment Industry Affairs for the Federal Reserve Bank of Chicago, and really one of the leaders in putting together the Faster Payments Initiative. So I know they'll have a good update there as well. So enjoy it, and I'll turn it over to Brett.
This is exciting. So you know the 8 words you can't say on live radio.
No, you did not tell us.
But anyway, we're going to be talking about mobile payments. So let's start off with a very simple question. What's the hottest mobile payments market in the world? Do you think?
Well, we can precursor the maybe where you just came from. So it's obviously Asia as it relates to Alipay and the things that are going on there.
Okay, so China's pretty hot in mobile payments. So you're not an expert on China per se, but for those of you that are unfamiliar with what's happening in China right now, we did have a discussion about this last night over dinner. And one of the really interesting things is mobile payments has exploded in China in terms of usage. There are entire cities in China now, in terms of urban centers, where cash is virtually not used, plastic is not being used, but mobile payments is being used every day. We're looking at projecting about 5.5 trillion in mobile payments in China this year, and 92% of mobile payments in China are handled through 2 technology platforms. Ant Financial's Alipay, so that was the payments network built on top of Alibaba, which is sort of an Amazon equivalent, if you want to put it in US terms, and Tencent WeChat, which was sort of like a Facebook equivalent, if you want to put it in US terms. So here's the question. We're going to do about 300 billion in mobile payments. That's the estimate for this year in the United States. Why the big difference, guys? Why does China appear to be so far ahead on the mobile payment stacks?
Do you want to go first, Travis?
I will take a shot. You know, in the U.S., I believe that it's been the most sought after payment environment and really ecosystem for a number of years, and largely because of the maturity of that process and the number of and volume associated with the payments industry. With that said, I'm a believer that our own maturity is our biggest Achilles heel, because within maturity comes regulation, becomes policies, becomes legacy systems that's been around for a while, and so you are, whether you like it or not, hooked into those. And a lot of the bigger players, and we can say the FISs and the processors and even the Visas and the MasterCards to some extent, their job has always been to hook the customer so they can't get out easy. So it really wasn't really built in a framework to allow for faster building, right? And so I think that the initiative that the Fed took as it relates to faster payments and so forth, to actually speed up and really digitize our infrastructure is about cleaning our own house. Our industry is a little dated and a little legacy, and it has some things that's challenging. But as a result of moving to a digital framework, it's really about solving our own infrastructure issues.
So maybe let's, sorry.
No, so I was just going to jump in, and I think, so actually before I get started, I have to do my disclaimer so I don't get myself in trouble. So really, any opinions that are expressed are those of my own and not the Federal Reserve System, so just had to clarify that, so now I'm free to speak. But I think one of the things that Travis is highlighting is the complexity of the U.S. marketplace. So we have over 10,000 financial institutions, all the different innovators and fintech players, along with the traditional banking sector that's providing financial services. So very diverse, very different, where in some of these other markets, you can take one or two players, 4 or 5, maybe even 6, and you can really change the dynamics of how payments are made. That's not going to happen here in the U.S. It's going to take a little bit of a more organized process to think about how we go about making these changes. And as Travis alluded, and Travis was one of the key participants in the task force effort with myself and 300 of what we kind of referred to as our closest friends. We were actually talking about the fact that the task force work has come to a conclusion, and we're not going to be working within the task force, but there's still a lot of work to be done. But it was a great effort to really bring various stakeholders together to talk about and look at ways of addressing these complexities and how we move the market forward.
So let's talk about that. You guys are both on the faster payments while the task force, as you said, is coming to a completion, and we're now looking at implementation. But the reality is one of the reasons China has been able to move so quickly is that China could just push out this regulation. And in where we see faster payments networks emerging in the UK, for example, you've got the same situation where standards can be mandated on the market fairly easily. But we have this problem of consensus because of the system in the US that sort of takes us longer. Is that a disadvantage at this point with the technologies around payments moving so quickly?
So let me just add that, feel free to jump in, but our feeling has always been that this is going to be a market-driven initiative, and bringing those different stakeholders and players to the forefront, getting the input and feedback from those is actually going to create a stronger end result. So one of the key things that the task force did was create effectiveness criteria. So they came up with 36 different criteria which essentially address stakeholder needs for what a real-time payments capability could look like in the U.S. marketplace. And they identified those needs, and it was driven from the various stakeholders within the task force, which included not only financial institutions, non-bank service providers, the consumer interest organizations and merchants, as well as corporates. So bringing in all those different perspectives really helped to inform those effectiveness criteria to say, if we have the capability to build something from scratch, here's kind of what we'd like to see for faster payments capabilities in the U.S. So again, a little different than maybe some approach that other countries have taken through a mandate approach. We're doing it more collaboratively, and the role the Fed has been playing in that has really been around the leader catalyst role, helping to bring these parties together to drive this change through market innovation.
With that said, don't kid yourself that when we all got it on these calls, and even in person, one of the very biggest issues right off the bat was we got to fix regulatory issues because they come from different bodies, right? So the Federal Reserve doesn't set every single thing that's going on. There's OCC, there's a lot of different agencies that build that up. So, in the end, what's happened ultimately is we've got a convergence of industries, payments, and fintech, and financial services is all coming together now. They were all regulated separately, right? So regulation is a stifle. As a startup, I can tell you that it is challenging. Now, I'm like water. I will find a way. But it is a matter of blocking and tackling a little bit because certain regulations were built for certain reasons, and don't forget that regulatory mindset in the first place is reactive, right? Most of the time, rules are put in place because something happened. We got to fix that. Don't want that happen again.
Risk
right?
mitigation.
Yeah, well, it's a form of risk mitigation. So it's not proactive and innovative in that case. So you're taking a culture and you have to change it to an ideology, and how do you do that, right? Because just the standard nature of risk mitigation, the individuals even playing those roles, 80% of them actually, I think, was predispositioned and born to say no first, right? And it's just, it's a cultural change. I think it's bigger than that, right? And so not having regulation in these other countries allows them to leap over that, and they didn't have some of the same challenges, right? So it is a, even when I joke about the task force a little bit, because in the beginning, they kind of came in and says, all right, guys, kind of y'all get along and figure this thing out, because if you don't, we're going to tell you what to do, right? And when you put a bunch of processors and people in the payment industry, being almost threatened to say, okay, we're going to regulate you to do this, and you won't have a choice, or you decide, guess what, you don't work together. So, but there is a medium, but there is pulls. There's strong pulls. I mean, you can look at the banking industry itself, and you take a community bank, and you take a large FI, and they are polar opposites in what they're interested in, right? So, and when we talk about numbers, 58 to 8,000 community banks in the United States, that's a lot of banks, and their job, for the most part, is serving the people in the community they live in.
Right. So, I mean, when we look at this historically with ACH, the ACH network, I mean, there was resistance from the incumbents to, sort of more increasing settlement on ACH for a number of years until we sort of got through that. So it's part of the problem that you've got incumbents here that have got a lot invested in point of sale networks and don't want to switch to EMV, and have got a lot invested in their check business, so don't necessarily want to move that to mobile payments. Is that part of the problem and the sort of consensus that approach to standards?
So I don't know if I'd categorize it as a problem, certainly a challenge that needs to be worked through. You have a lot of investment in legacy infrastructure, you've got P&L that affects things down the line. So folks have to be cognizant of that, but that doesn't mean we can't evolve and move into new capabilities. So it really ends up at the end of the day is, what are the demands and the drivers that the consumers and businesses are looking for? So meeting those requirements that they're asking for. We talked about the digital world. Everybody's got one of those phones in their hand now, pretty much. Folks are used to the instant access to communication, to information, to you name it. But when it comes to payment, why shouldn't it be the same for money? So taking a look at that, folks are saying, hey, there's an opportunity here to make improvements, and that's really what the task force was driven is. How do we make those improvements? What advances need to be done in this collaborative environment, market-driven space to help facilitate that short of a mandate?
I would add to that there's aside from the competitive side of companies and strength and money and numbers, is that we all feel this on a regular basis. There's an inherent psychological resistance to change. As the old adage is, don't fix what's not broken, right? There's a lot of people who are making a lot of money doing the same thing that they've done for 40 years, right? And they have a lot of control, a lot of power. So, imagine a world where you could actually come together in I'll overuse the word, but a marketplace that allows that to happen. And almost in the way that the Federal Reserve sponsored it. I've been to a lot of governmental events or some sanctioned, some not activities, even ones that are disturbing. When Dodd-Frank rolled out and things of that nature, that this was unlike anything I've ever seen, right? And I've told them over and over again, the way it was conducted, and there was a lot of thought put into allowing us to really create an environment. Was there some of those people that were sitting there banging on the tables going, you can't do that, because they were more interested in losing their business? Yes, right? But as long as you created a situation in our current economy where everybody can still walk away, and then also realize that change is coming. So what forces your psychological to change something you're stuck? It's either fear, you know, or love. So either you love to do something and you go after that unity and trying to make something better.
You're getting very philosophical.
I was gonna say, I don't know how you follow fear and love.
Well, I tell you, because fear is a driving force. The fear of being left behind. Right? Yes, that's a real fear that will make people move and change. And so what I'm advocating is there is, and I would say that it is coming, an environment that would allow for that to happen, where everybody in the ecosystem today still plays. But then in some cases, like a very large bank just called me here in the city a couple weeks ago, we understand where things are going. And we do understand that.
So let's hone in on that for a second, because I met, in November of last year, I visited Shenzhen in China, and I met the CEO and chairman of China Merchants Bank, one of the largest, the 5th largest bank in China. And we were talking, and I was talking about some of the stuff that's happening in fintech around the world and so forth. And he stopped me, waved his hand, and he said, no, tell me how we beat BAT, right? And BAT is like the GAFA of the United States. You know, Google, Amazon, Facebook, Apple is, you know, the FANG stocks, right? Facebook, Amazon, Netflix, Google. But in China, it's BAT, Baidu, Alibaba, and Tencent. So he wanted to know how they can compete with these guys. And so I started talking to him about strategies to make payments richer and things like that. He waved his hand and he said, no, you don't understand. The banks in China have already lost payments to the technology companies. We're not in payments anymore. I'm worried about losing credit. Right? Now, that was, for me, that was an incredible insight from a CEO of a major bank in China. But it does occur that if you look globally around the payments networks that are getting the fastest scale in growth these days, M-Pesa in Kenya, Paytm in India, Kakao in Korea, Alibaba and Tencent in China. These are all technology or IP-based networks that are not bank-owned. But right now we have somewhat of a resistance to this approach in the US, where we tend to favor the incumbent networks. When do you think that's going to come to a crunch? When are we going to get to that point where the players in this ecosystem are going to have to accept that the technologies we use for payments in the future, things like our mobile phone, aren't ever going to be a bank-owned technology?
So I'd like to kind of start. You can, add some comments if you want. I think one of the things that's going on in Europe is interesting, because that was, and that's it's the open banking, and this is the APIs for every bank, and really is driven by the ownership of the information that's required. Because in Europe, you own your data. You own your personal data, your banking data, and you can extract it and move it at any point in time. So the regulation was to say that you can move anytime you want. So as a result, technology-wise, banks have to have an API by a certain date that, in essence, a brand new bank, or if they want to move their account, they can literally suck it out and stick it somewhere else within seconds. And so they're not stuck to any one particular place, and it's their data. So while we don't have that same type of regulation and have it in the US and in that vein, I think it has a huge impact to the understanding of interoperability and ubiquity as it relates to not only coverage and access, but probably more importantly is the fact that it creates that innovative type of way to grow. The reason why Alipay has grown like that is it's an open source type of model. So you put something out there, and we'll just use this as an example. A gentleman created a code and threw it in an open code base, and it got extracted, and now there's a thing called Bitcoin and blockchain that's consuming every newscast, every feed out there.
Have you heard the rumor that Satoshi is not actually one guy? He's full.
Oh, I wouldn't surprise me. Soon he'll be Santa Claus. but it's you know when you put something out there and allow the community to build on it, you can't control it. It has a momentum of its own, and that's kind of what's happened, right?
Yeah.
It's because they didn't have anything, and they had wallets, and so everybody adopted that quickly, and so
Like they weren't writing checks to pay landlords.
right. So you know, I talk about this theoretical aspect because in the end, everything about payments is adoption. If you don't have adoption, then you might as well go home because it's not going to happen. So you know, psychology has a lot to do with how people do things and so forth. So that adoption is what drives that. And so when you look at an environment that allows this ecosystem to come together in that sense, and I think the open bank connected layer almost, right, that one floats above the other. So do we need really regulators to be innovative? And you're telling, you know, basically one type of person to be something different, right? Now, I'm an introvert. I need to all of a sudden be a type A. I don't know that that's going to work well, but you know, because there's a need for that to some extent, right? And so, is that really? Should that be just the actual funds movement, and then the top be more a virtual experience, which still allows you to spend? Because then, you know, really, who's managing the risk between that of the net is the tech. And so, you know, I know that like us, we take on certain risks and we manage those risks, and it's just all about risk management. You can manage just about anything. So I would actually say that maybe we don't, because maybe we're pushing the ball up the wrong hill, right? Because we're trying to, even in the task force, we looked at the entire ecosystem. I mean, everything from the source of funds all the way to destination on every tenure. I mean, every little leaf was unturned. So are we looking at it wrong, right? So I have a big thing about optics and about perspective and how you see things. And so maybe we should just look at things a little differently than what we're used to. And maybe come up with a model that actually allows for regulation and protection of the real funds and security of any government or agency or entity, while disconnecting the virtual world that allows for the user experience. You live in that, right?
Sure.
You talk about that a lot. And so the problem is we keep trying to force them together. And I've even talked to you about
Right.
that.
Well, so, I mean, the US is supposed to be a free market, right? But right now, it looks like China's a freer market if you take a use case on local payments. Right? More free than the US. Is that a design? You know, this is the way we regulate the market.
Yeah, and yeah, maybe just add on a little bit of what Travis said. You know, you sound like you're kind of trying to put a square peg in a round hole a little bit there, but you know, again, one of the approaches that we took with the task force was to be inclusive, which included regulators.
Right.
So having them sit at the table, again, be part of that conversation up front. So as we're starting to talk about and design and think about what a real-time payments capability could be for the US, they're sitting right there at the table with the guy pounding the fist and the guy saying, I've got this great new idea. So they can kind of balance all that and get all that different perspective. So having them there at the table may get to a little bit of that, but to Travis' point, may mold them a little bit, but I don't know if it's quite going to be the square peg into the round hole example, but hopefully that gets them involved more in the conversation up front.
Well, some of that evolution that mix came into, you know, there's another task force, security payment task force, that still is active, and it's an ongoing task force, which, again, Dan and I are both part of that also, but that's probably where the rub really meets it. Right? So in the protection of our environment, in the end, that's where the physical meets the virtual, right? And so, you know, things like personal identity management is going to be so important as we evolve more into the digital society, because I don't know who's on that other end. And I don't know that it is really who you say you are, because for how many years have we had our identity stolen? And how long are they going to set on it and then use it against us later, right? So there's all this stuff. And some of the security task force, there's some downright scary stuff coming out of that.
So, you know, you have India right now that have this demonetization move, and that's obviously made created a big impetus for mobile payments. But the other element that's quite interesting in India is they've created this national ID program. And that national ID card they created, the Aadhaar card, did more for financial inclusion in just a few years than any other methodology they'd used. Now, in the US, we have this problem around financial exclusion because of documentary requirements and things like that. But there is some innovation going on in that sort of non-bank alternative financial services space. So do you think part of it is to maybe have, we've been talking about the OCC, charter and things like that. Do we need some more initiatives like that in the US to allow some of this innovation to take place rather than sort of trying to fit around paving a square hole in terms of the existing regulation? That seems to be the pattern we've seen in markets like Singapore and London. What do you guys think?
Well, I agree, actually. India started the Payments Bank initiative, I think it was 4 years ago.
And the challenger banks in the UK.
Right, and so it created this environment. You could almost argue that it's like a perfect sandbox for the government to see what happens. Mm-hmm. And actually, the Payments Bank didn't really materialize as well as they thought it would, which is why demonetization came into play, and that aspect of it drove it stronger, right? Because his goal there was to try to open that up, and since it didn't work itself, he drove it himself, right? But that access, and I love the idea of the OCC concept, because at least you see what happens, but immediately got attacked too. Yeah. Just like, I think you were talking last night at dinner, how, or maybe it was Jason, it was the aspect of so many things that's got that fault through our agents, right? So the buggy manufacturers fault about the car, and the phone was then the telegraph. Everybody's always worried about their business, right? And so, but at the end, if we don't evolve, we're going to die on the vine, right? So the real thing is the evolution of I go back to that psychology of what we want, and that generations, and everybody talks about the millennials, and there's positives and negatives that come out of that, but ultimately what it amounts to
crazy kids.
Yeah, but really they just just give me what I need, don't bother me with all this other stuff. So they actually grew up with computers. I mean, my kids are right in the middle of that, and at 5 I actually had them reformatting OSs on computers. I mean, they broke into the elementary school, go figure. I mean, it's just, and hacking it. It's just these kids today, that just comes.
What you're saying is your kids are cyber criminals.
Yeah, well, not yet.
All right. So listen, we've only got a couple of minutes left, but I want to give you both this opportunity to sort of wrap it up. But let me sort of frame it in maybe a different way. Looking 5 to 10 years out, based on the work you've done on the task force and the evolution of payment systems we're seeing around the world and so forth, where do you think we're going to be at with mobile payments in 5 to 10 years? Give us a sort of 60-second summary.
So you're asking for the crystal ball.
I am.
You are.
So you got your finger on the pulse.
I do, but So one of the things that I think is the reality here is that change is coming. Okay, so within the U.S. marketplace, while we've got the task force came up with recommendations. There's some follow-up work to do there. Things are happening in the marketplace as we speak. So things are getting stood up, capabilities are getting stood up, people are innovating, there's new things happening. The task force goal was to have ubiquitous receipt by 2020, so that's not even 5-10 years, that's a short 3.5 years. So it's going to take a lot of work to get there, but that was the goal that they kind of put out there as the line to shoot for from the U.S. marketplace, and then the recommendations were all aligned to help to support that, to get to that capability. So real-time payments are coming. We have them today in what we typically refer to as closed-loop payment communities. Right, exactly, different services. But if you think about your cell phone, or even, there's probably a few people here that operated in the debit card space, the ATM card space originally. Remember, you actually had to look on the back of your ATM card to see the logos, the bugs that were on the back to make sure it would work in the machine. Does anybody even think about that anymore? You just put the card in the machine and it works. So capabilities are coming. We have to figure out how we address this interoperability issue, and then the customer experience so that folks are operating in the same space. But things are coming, and evolution is on its way in the U.S. market.
Great. Thanks, Tim. Travis, you want to wrap us up?
Yeah, absolutely. So, from what we were doing with the Federal Reserve, I think a lot of the kinks and manual and error-prone processes will be resolved, 5 to 10 years. And there might be some cleanup left on the floor, but, the Federal Reserve will, handle that for the most part. A lot of their work is some of that. Right? So, and I would say even not just progression of same day and so forth, has allowed them to manage even workloads differently, right? Which moves us to more of an instant per transaction kind of movement rather than before. But you talk about mobile wallets, right? So I'm a firm believer, and somebody I said this in a panel earlier, I think, is that the mobile wallet today, and when you think about a wallet, I've said this once, I've said it always, I never see the wallet as an actual product. I see it as a feature functionality. So what I see over the next 5 to 10 years is payments is not going to be an act. Nobody wants to pay for anything. They want to acquire goods. And so the business model of a service bureau and handling payments as a separate thought process will not be the case.
Yeah.
It will be integrated into the business model. It will be integrated in our solutions. We will think about it. We will move forward. We will have dinner. We will take a taxi. We will go places, and it will happen. And because we will define those as a personal level of how that criteria is managed. I use Uber as a perfect example of that, right? It is a digital wallet, but nobody will ever call it that. But it is a digital wallet that you can catch a taxi with, But in essence, that is what people use that for many reasons, for examples. But in the payments world, right? Friction is the problem.
Yeah.
You eliminate that and make it an afterthought and make it about what you want to acquire. We have adoption, we have left off.
Yeah, no, I agree. And I think that's the trend we're seeing on a global basis. If you look at these other mobile payments networks who've got these rapid scale, all of them have that one thing in common, that they are removing friction from the system. And so eventually, I guess that's the customer experience that's going to lead to ubiquitous mobile payments adoption in the US. Thank you both for being on Breaking Banks and participating on the panel today.
Thank you, Brett.
And thank you for